And I cannot stress how much that this is going to hurt not only the US economy, but the global economy as well. And ultimately, when the government screws up, it is us, the citizens, that suffer. So that is my rally cry to make plans now and take back control of your money. Take back control of your financial future. Welcome to another edition of Wealthy and Wise Wednesdays, my weekly podcast where I share a few words of financial wisdom to help put you back in the driver's seat of your financial future. Today is Wednesday, September 8th. Thanks for joining me for this week's episode. Today I'm ringing some alarm bells because economic danger is everywhere. Historically, September is the most dangerous month of the year for the stock market, and October is the second most dangerous month. And this is compounded by the fact that the global economy is facing one of the most perilous times in history. Knowing this information, what should I be promoting to my prospects and my clients? Safety, safety, safety. Now, this market melt-up over the last 2 or 3 years has fooled a lot of people. It's got them thinking that they are some kind of genius investors. But the bottom line is everything has been going up. So I am preaching a return to fundamentals, a return to common sense, and a return to solid planning, because that market melt-up, that tide could be about to change. There are economic dangers everywhere. Let's go through a few things right here, shall we? Number one, on Monday, the largest block of unemployment benefits just expired. So a lot of people are going to be hurting. And without those benefits, that means there's going to be a lot less spending, a lot less money trickling into the economy. Number two, at the beginning of August, Joe Biden went through the CDC to try to extend the moratorium on evictions and foreclosures. Now, the Supreme Court, I thought it was going to take them quite a while to strike this down because the Supreme Court already told them, you cannot do this. This is unconstitutional. And they tried doing it anyway. I figured it would take months, though, to go through the process, but I was wrong. At the end of August, the Supreme Court struck down that continued eviction moratorium, said it was unconstitutional, and for them to extend it, they would have to go through Congress. So guess what? I think that within the next couple of months, we're going to start seeing a lot of evictions, and then we're going to start seeing a lot of foreclosures. Could that lead to another housing crash like it did before during the financial crisis? Who knows? But the potential is definitely there. Number three, inflation has been at 5%. And I'm talking about 12-month cycles of inflation increasing by 5%. It's done that for 3 months in a row. That is the first time that it's been at 5% for 3 consecutive months since, guess when? September of 2008, smack dab in the middle of the financial crisis, just weeks before the stock market crashed. Economic danger number 4, the disappointing jobs report coming out of August. They were expecting some 720,000 new jobs created, but guess how many they got? Just 235,000, about a third, only a third of what they were expecting. So what does that mean? Is this economic recovery, is it stalling? Is growth going to stop? We've also seen economic danger number 5. COVID hospitalizations are ticking a little bit higher. And we know that this heavy-handed government, they like to step in and make people feel like they're doing something, that they're taking control, that they're in charge. Well, guess what? Anytime they implement or impose restrictions and lockdowns, it causes the economy to go into crisis mode, to just clam up, right? Because of all this that's going on, economic danger number 6, consumer confidence. They do surveys and reports on this. Over the last 6 months, consumer confidence, consumer sentiment has absolutely plummeted. It's at lows that we haven't seen in decades. And the thing is, the stock market and the economy, they're very emotional things. In large part, they're driven by consumer confidence and consumer sentiment. Number 7, economic danger. Geopolitical tensions have arisen in the Middle East. They're continuing to rise around the globe. So who knows what that's going to mean for the U.S. economy and for the global economy. And then finally, economic danger point number 8. The Federal Reserve has ramped up its talks that it's going to taper asset purchases and start to increase interest rates. And we all know that companies like borrowing money for free. And if interest rates go up, they're not going to like it. It's going to slow down their growth. And the stock market isn't going to like it either. So I'm not trying to be a doomsayer. I'm not trying to be a gloom and doomer. I'm simply trying to be realistic. I'm simply trying to help people educate themselves and understand what's going on. Again, let's have a plan. Let's get back to common sense. Let's get back to fundamentals. Okay, in other news, Business Insider published an article just yesterday calling for a 15% correction in the S&P 500. That's the overall general U.S. stock market, the 500 largest companies in the United States stock market. They are calling for a 15% correction in the S&P 500 by the end of this year. They were quoting Morgan Stanley's Lisa Shallett. She is the chief investment officer of Morgan Stanley's wealth management division. She warned, and I quote, that the continued strength of the market isn't constructive and instead indicates that stocks have not repriced risk in any meaningful way. And so she says that they still see the economic cycle and the bull market remaining intact. However, she thinks a correction is necessary to restore risk premiums to preserve forward returns for both selective and active stock pickers, end quote. She says the broad index needs to pause, consolidate its historic run, and position itself for 3 main things: lower liquidity, higher real interest rates, and higher inflation. So the CIO explained that what's really driving the market's current upward movement, get this, what's really driving the market's current upward movement is investor faith that Jerome Powell and the Federal Reserve will delicately adjust its monetary policy throughout all of these changing dynamics without making any mistakes. Absolutely laughable that investor confidence is based on this government agency, because this is one thing that it surprised me when I first learned it 10 years ago. The Federal Reserve, here's the thing. It's not federal. It's got no reserves. It's a private banking cartel, and it is in cahoots, so to speak, with the federal government, working together to influence monetary policy. Now, when we talk about the government and their influence, if you want a firsthand example of government ineptitude, please consider what's happening in Afghanistan and what's happened there recently. I blame that ineptitude of the withdrawal on government. And I'm not going to get too political here as far as parties go. I'm just going to say that I believe that the government and the military are now so massive that they're not governed by any coherent strategies. They're too big, they're too bloated. And because of that, many poor decisions continue to be made by all political parties involved in government. Our government could not create a successful strategy even when American lives were at risk, even when American lives were in danger. Now, here's another ridiculous example of government failing at all levels. Headlines dated August 26, 2021 revealed that 89% of all the money that was earmarked for rental relief for tenants and landlords, 89% of that money had not found its way into their hands. 89% of those benefits had not found its way into the hands of tenants or landlords. Many lives have been disrupted, even harmed, by the government's lack of organization providing these relief benefits. But the other thing is, these relief benefits, it's not even real money. This is money that they printed to try to prevent renters and landlords from being harmed. Yet, because government continues to fail at every level, many Americans do not receive either the assistance or the help or the benefits that they've been promised, even when not delivering that help becomes life-threatening. Now, what does any of this have to do with financial planning, for my prospects and clients and people watching this right now? What does that mean? Let me put it like this. In life-threatening situations, if the government can't rise to the challenge, if the government can't rise to a level of efficiency and effectiveness where they can actually get things done, What can we expect for government programs, financial programs, like Medicare, like Medicaid, like Social Security? Look, just last week, this news broke that Social Security, the trust fund, is running out faster than they expect. That this trust fund is expected to run out in 2033. That's an entire year earlier than the last projections or calculations that they ran. You guys, that's less than 15 years away. So what is that going to mean? How are they going to fix that problem? Are they going to increase taxes? Are they going to reduce benefits? Are they going to print a whole heck of a lot more money? Yes. The answer is yes. Probably all three of those things, right? Because that's what the government does. They mismanage, they mishandle programs, and then they do things that are going to negatively impact us in order to try to cover up their problems. Yet we are supposed to believe that they have our best interests at heart. We're supposed to believe that they can lead us through or navigate through all of these challenging economic times. And I'm just not buying it. I'm just not buying it at all. So my question to you is, do you think it's wise to put your financial and retirement future in the hands of this very same government? Do you think that the government has our backs? Or do you think that it has its own back? When the chips are down, who are they going to watch out for? You or themselves? And I think that answer is obvious. Isn't the thing that makes America so great and so wonderful is the fact that we all have freedom of choice? We can choose to build financial and retirement success despite the government. We can choose to build that success in spite of that government. And isn't that the only problem? That we do have the choice? We have a choice to build a strategy to have success, or we can make the choice to just keep doing what we're doing and keep putting all of our money into a government-sponsored retirement plan, like your 401k or your 403b or your 457. Now, I'm not saying that a 401k is bad, especially when maybe your employer's giving you a match and that's free money. But are you really going to put all of your money there and expect that the government isn't going to try to tap into that money somehow? Whether it's just simple redistribution, because we've heard horror stories of other countries around the globe where the government seized funds out of the retirement programs. Or maybe they're just going to increase taxes, because how else are they going to pay for all of the COVID stimulus? How else are they going to pay for this $3.5 trillion infrastructure bill? How are they going to do all this? Where's the money going to come from? Is it going to come from the people who don't have any money? Or is it going to come from the people who have saved $500,000 or $1 million in their 401k? Pre-tax money that's never been taxed yet. I don't know. You do the math. Can we trust these people or not? Look, if you and your family, or if you and your business, if you choose to rely on the government for your financial well-being, for the most part, I feel like you're going to be sadly disappointed. So my question to you is, do you wish to make that choice to build a strategy that will allow you and your family to have control over your financial future? Or do you wish to cede control to the government? If you trust them and you wish to concede control to them, keep putting all of your money in a 401k. If not, there are maybe other things that you should be looking into to help balance your financial life. So that's not where all of your money is. All right, now let's get back to Morgan Stanley CIO. In reaction to the recent Fed meeting, this is what she said, that both stock and bond investors cheered the news coming out of this recent Fed meeting at August Jackson Hole. It left asset bubbles and financial stability concerns to be damned. Because what did they say at the Fed meeting? Nothing much, really. They talked about inflation being transitory, as if anybody believes that anymore. They talked about, oh yeah, we're going to raise interest rates. We have to get back to, a more solid fiscal policy, but not yet, right? And so everybody, all the investors kind of realized, yeah, they're probably just giving us lip service and they're not going to raise interest rates, at least not right now. So against this backdrop, investors, this is, again, got to be clear here, this is Lisa Shallett, CIO of Morgan Stanley. I have to be very careful with compliance that they don't think that I am giving blanket financial advice to everybody, right? The advice that I give is personalized. But this is what she said, and I think that it's telling. She says that investors, because of all of these economic dangers that we've talked about, because of these asset bubbles, she thinks there's going to be a pop, apparently, because she says that investors, and I'm going to read you this quote from the article, investors should consider taking profits in their index funds now and rebalancing their portfolios towards high-quality cyclicals, especially financial stocks, and dividend-paying sectors like consumer staples, consumer services, and healthcare. You know what she's talking about doing? She's talking about getting defensive. She's talking about getting defensive, which, if you're retired or if you're thinking about it, that might be a smart move to make. If you're retired or if you're thinking about it and getting prepared, at this point in time, after this huge market melt up we've seen over the last few years, does it make sense to take some of your winnings off the table? There's an old saying that goes, nobody has ever gone broke by taking a profit. Now, I am not talking about cashing out your 401k or cashing out your Roth IRA and sticking your money in the bank. That's not what I'm talking about. But I am talking about other options, good options, such as an option that I really like. What if you could put your money into a program where you could have your principal be completely protected, could never lose principal during a market decline, but you could also participate in the upside potential of a market index. For example, if the S&P 500 went up 15%, you would participate in that growth. Maybe you would get credited 7 or 8% interest. So you would participate in that growth. But if the S&P 500 went down 20%, you wouldn't lose a dime. You wouldn't lose a dime. And then, if the next year, if the S&P 500 started going up again, instead of you having to kind of spin your wheels and make up those losses, you would just pick up right where you left off at because you never lost a dime. Would a strategy like that be valuable for you? Would a strategy like that be valuable for you? Would it help you move forward with confidence? If you're curious about strategies like these, drop me a line here on social media, or you can email me at ronald.sneller@snellerfinancial.com. And I tell you what, I'll even link my calendar below. So if you want to schedule some time on my calendar, you can do your own appointment if you want, okay? Now, the reason that I'm ringing the alarm bell, because it's absolutely imperative that I prepare my clients, my friends, my family to successfully navigate all of these economic dangers that we're talking about. Look, I want to help people prepare for this coming financial storm. Whether it does happen this year, like Morgan Stanley CIO thinks, or maybe it's a year away or 2 years away. What I'm really talking about is planning and preparing for uncertainty. So no matter what happens in the market, you're prepared, not just so you won't be hurt by it, but ultimately so you can be in a position to take advantage of these things, okay? The greater mission here is for me to use my valuable expertise to position my clients so they can take advantage of these perilous times, because we do not and cannot know exactly what's going to happen in the future and when. But we could make big mistakes that could cost us a significant portion of our money. So wouldn't a more intelligent and prudent strategy be to always employ safety first, to get away from some of this speculation that we're doing? And that's why I build the foundation of my clients' plans on safe strategies that will allow them to protect their assets, but also to allow liquidity and access to funds that will enable them and allow us to take advantage of opportunities in the market, right? Remember, financial surveys show a couple of really important things. First, Americans are far more concerned with loss than they ever are at missing out on gains. You want proof of that? Well, the proof is over $20 trillion that are sitting in money markets, CDs, checking accounts, short-term bond funds, and savings accounts, earning practically nothing, let's say 0.5%, and that's being generous. So my question, if that's you, now look, I'm not talking about $20,000 that you have as an emergency fund. I'm talking about, I've worked with retirees that have $300,000, $400,000, $500,000 in the bank simply because they don't want to risk that money in the stock market and they don't know what else to do with it. But what if I could put you into a program where you could average 5 or 6% average rates of return, but have the same level of safety, where you would never lose money? You have to message me about this if that sounds like you. Look, surveys also show that Americans are more afraid of running out of money than they are of dying. So my question is, Do you want to take a shot in the dark that you would become rich? Or would you rather have a rock solid guarantee that you'll never be poor? Americans choose the second choice overwhelmingly, more than 90%. Now, what if there was a way that I could show you that even if you completely ran out of money, that you would never run out of income? Would that make sense in these uncertain times? What if I could show you a way to do that? These kind of things are possible, you guys, when you're working with a financial professional. What if I could show you how to take some of that money out of the market or out of your 401k, protect the principal, and use those proceeds to fund your own type of personal pension? I do not make people rich. They accomplish that with their skills, with their talents, and their own unique abilities. My great strength is helping them have a plan that they feel confident about so they can move forward in their financial lives with confidence, knowing that there's not going to be an economic calamity that's going to wipe out all of their life's hard work. So let me say it again. Economic danger is everywhere. And the biggest threat out of all of these things that we've talked about, I feel like, at least right now, is the stealth tax. This inflation is what I'm talking about, because it is a type of tax, but it's a stealth tax because people don't realize it's happening. So a well-balanced, well-managed, diversified portfolio may just be the best way to protect your earning power and your purchasing power from the ravages of inflation. Because it's becoming increasingly clear that the only way that the governments are going to be able to provide the benefits that they've promised is by printing more and more and more and more money. And look, our government is currently exercising that option in spectacular fashion. Look, and here's the other thing. Our country has sold the Kool-Aid to the rest of the world. Every country on planet Earth that can print money is doing so right now, and doing it in exorbitant amounts. And that is going to cause huge problems. Some problems that we're already well aware of, but other problems will arise that we haven't planned for because we haven't been able to foresee what would happen. Because the level of printing that we're doing right now is unprecedented. And I cannot stress how much that this is going to hurt not only the U.S. economy, but the global economy as well. And ultimately, when the government screws up, it is us, the citizens, that suffer. So that is my rally cry, to make plans now and take back control of your money. Take back control of your financial future. Because when this happens, when they print money and when it gets out of their control and it gets away from them, stocks, bonds, real estate, commodities, all of these things are going to see more and more volatility. Even interest rates are going to have more and more volatility. Now, this volatility can be planned for, but you have to strategize for it. When? Before the next crash or after? Of course, you have to do it before the crash hits, right? So planning ahead, it's really the only way to achieve this financial and retirement success. So if you think of all of these dangers, does your current investment advisor, does he really know you? Do you have a relationship there? And is that relationship based on a common set of morals and values and similar goals? Okay. Are you getting the service that you desire? I've had clients come over to me from that same Morgan Stanley that we talked about earlier. And because they weren't a mega millionaire, because they weren't worth $5 or $10 million, they maybe got one phone call per year. So this is about personal relationships and getting to know my clients and helping you succeed. Now, look, we talked about a lot of economic dangers today, and there are just, we really just have a few minutes. We could go much more in depth, but fortunately, our industry has the strategies and it has the tools to help you navigate through these challenging times. And doesn't that make this the most amazing time in history to be a financial advisor? It absolutely does, and I absolutely love what I do. So we're kind of getting toward the end of today's talk. So if you found this kind of financial information helpful, this is what I want you to do. I'd love to hear your thoughts. Drop a comment down below and share this video out there. Help other people wake up to what is happening so they can protect themselves. There's plenty of other resources that I put out. Visit my YouTube channel at Sneller Financial on YouTube. Take some time to learn, subscribe to the channel, and also my website has a ton of resources at snellerfinancial.com. So again, you guys, if there's anything that we talked about here today that you want to know more information about, that maybe you need to get a plan in place, maybe there's just like one thing that really stuck out to you that you want to learn more about, please feel free to message me. You can email me. You can visit my website and contact me there. And again, I'll link my calendar down below. But for today, that wraps it up. So that is my rant. And as always, thanks for listening.